Alright guys, so welcome to the channel. Those who are new and those who are already with the channel, I thank you for your support and for being this long with me during this journey. So today as I'm gonna just keep everything very quick and simple. Okay, I'm gonna just go through a trade which I took during CPI of this month. I am a bit delayed of posting this video, even though I've posted the actual trade which I took in the before and after of this trade in my Telegram group. So if you're not in my Telegram group, go ahead in the link, click the link in the description, and you know the drill. Right? So CPI days are like something which you have to participate in before the time comes in. Okay? Because usually 7 or 8 out of 10 times you're gonna see that there is a crack in correlation before even there is a actual trade or the actual move like 8:30 move, right? So what I do basically coming into the day, number one thing is I do not catch the 6 p.m. candle, right? Because I'm in UAE and I like basically I'm sleeping through it, and like early in the morning I wake up, it's almost like close to London opening. Okay. So I'll just skip this candle, which is a 6 hour candle. You need this chart. So I would suggest that you get a premium of trading view somehow, right? Because this 6 hour chart is much more easier and helpful. Okay. So what you do when you begin your day, number one thing is you mark out the opening of 6 p.m. All right, because in futures the 6 p.m. is the actual new day open. All right, and I'm not talking about true day open, I'm talking about the new day open. New day open actually helps you guide yourself or gauge the premium and discount zones of the day. Okay, and this one this one single profiling of the chart has helped me actually get funded and everything. Okay, in my top step. So profile the day according to the opening of the 6 p.m. Mark the 6 p.m. out. Okay, and see if you have a crack in correlation plus a really clear target for yourself to target, like a drawn liquidity, I would say. So right, there we go. So we have this reference point for ourselves, right? We have it. Now if I go on a 15-minute time frame, okay, we have this high which is intact. Over here everyone is thinking that market is going to go lower, right? Because in the retail or a normal mindset, people will be thinking, yeah, here we go, we have a break in structure right there, break of market structure, price is respecting this broken low which has turned into resistance now, and we are just chopping around here and there, right? At some point they would be right, because we are trading where above the opening of the day, right there. Okay, and if I'll move even further, we have this high as well, this high which is intact, this high which is intact. So here, there is a basic rule in the understanding of price. When everyone wants to sell, you should be looking for reasons to buy. Mark the word reason. Why I say you need reasons to buy, not just blindly buying anywhere or selling anywhere, right? So once you have one reference point, which is your new day open, once you have a true target which is set for you, that there is a resting liquidity above the opening of the day, okay, especially days like CPI when you have like a major move coming in. Okay, all you do is, if you see a crack in correlation below, right, at the lows where there is a crack in correlation which is bullish, for example, you see here, where is it? So here I'll open up the 6-hour chart just to look at and give ourselves the reference. Okay, this is the open. Okay, here in S&P 500 we took out this low, but in Dow we failed to take out this candle's low. You see, this is our number one telltale sign that there is another Kraken correlation which is coming. So never always, never you should do what? You should never just depend on one single Kraken correlation. You should not. You need to wait for a actual, which which actually literally did play out right after that. So here we go. We had a Kraken correlation between these lows. Okay. Oh my God. Right. These lows and a 90-minute cycle Kraken correlation right there. Now, what we do as, in terms of psychology, what we do, if we see that there is no clear target at the highs, okay, no clear target, and even here people would be thinking, oh look, there is not a low resistance liquidity run. There is one. It will be created soon. You'll see it. But once you have the higher liquidity, resting liquidity above established, and then you have your narrative which is being established over here, right? Here all you do is, once you see the trade actually unfolding, you take the trade. It can be World War III. Let it be the Jesus' second coming. You take the trade and you manage your risk. Okay. Now, this is the single candle which took out the low, right, of the 90-minute cycle. You can see there is this one, right? So I marked out this candle's high. Okay. And I just patiently waited for a true change in the state of delivery right there. Okay. The moment I saw this, I simply placed a limit right there. My stop was below this low. Okay. And if you would see, the same candle, this one, where my cursor is, in Nasdaq we have an up close candle, S&P 500 we have an up close candle, Dow Jones we have a down close candle. So that's a Kraken correlation again. And those who do not understand PSPs and everything, you guys need a lot of training. And my target was around here somewhere, 1:4 or something I kept, right here, around here somewhere, in this fair value gap right there. Even though we had a target there, okay, even though we had a target there, this was enough for me, this one. Why? Because if I'm taking a trade on a 5-minute time frame, I need a normal 5-minute target, which would be this internal liquidity over here, right? And I don't want to be a hero. That's all. That's why I didn't take, all the way here, even though this would have worked out immediately. But then I just didn't want to be a hero, and I just wanted my criteria to be met, and for me to be out before any major move unfolds. So we waited again. Here we went above. Now what market is doing is it's making people buy and sell, FOMOing here and there. Okay, everyone over here wants to sell. Everyone who is here in this, who saw this impulse move, wants to buy because they don't want to miss out on the move and they want to make money, right? And you would see where we are right now. Like if you remember the blue line right there, okay. Oh, sure. Yep. And price is even below the true open of the day, okay. And this, if you would see, this candle is the actual true open of the London session, okay. So 130, 730, they are important candles. You should use them as your entry points or exit points, all right. But here the idea was different for me. Here I wanted to buy below the actual opening of the day, okay. And price over here is above, or actually it's in line with this one. This true open and the day's open is aligned, but I wanted price to come back down below because my reasoning for price entry was here. And I don't go to the price. Price has to come to my entry. That's one of the criterias. Here, everyone is being chopped off. Okay. Everyone's confused, and confused again. Soon we'll have our move down. See, here still, everyone here, those who wanted to buy, and they see this fake move above, they want to buy again, like right there. And then what happens is, bam. Now if you see this candle right there, okay, this one candle, this one single candle, this was the one which took me in the trade, okay. And then the very next candle took me into the drawdown, coming up to what, towards this PSP, this one candle, 140 candle. What time is it? 7:10. Okay, my entry was done at exactly 7:05, right? 7:05 candle closed and my entry was taken in, and I was hit into a drawdown. Here is the actual substance of your patience is tested right there. Even if this was to come here, right there, I would have not moved my stop loss. Even if it would have come here, like literally till here, and if the spreads would take me out, whatever, but I will still not make a single change in my stop loss. Why? Because it's predetermined for me and my entry criteria, okay. And we were wondering why there is no basic low resistance liquidity before. We have it created right now. See this high, these highs right there, they become a simple small target for anyone to mark. Anyone, okay. Moving forward, psychology is tested here, right? A lot of people would just break even over here. A lot of people. Let's see what happens after this. Here, I guess we had another crack in correlation, like you know, doubling of cracks right there. One. This is one. This is two. You see here. It's just everywhere. London slow, New York slow. So Once you see this thing happening, the doubling of the cracks in correlations, it's one of the most strongest indicator, and I say indicator with price and time, that the news which is upcoming is gonna drive price like insanely high, okay, or according to the direction which the actual crack in correlation is being present. And there you can start building up your entry models or whatever you want to call it. Okay, CRT, change in the state of delivery, want to trade anything you can, no problem. Here you can just add your positions to add the support level right there. Okay, and mark out the what? This is the 730 candle. This 730 candle will later on become what? The actual support for price. But for now, since we are already in the trade, right, let's see how it played out. Here, boom. Keep your eyes on this one, this high, because I took another trade after this. Okay, keep your eyes on this high. This high is taken, right? But close this off. Delete this one. I just keep the chart clear. Just keep your eyes on this candle right there, this one. Price comes down, goes back up. Here everyone wanted to buy here, this one. Everyone just wanted to buy, but then they were wrecked. Why? Because they were buying in the premium of the zone. You do not have to buy at the premium of the zone. You have to buy below here. Okay? To buy below and keep your stops at the lows of the crack in correlation. And then if you see right there, was touched this one candle. But in S&P 500, we failed to do so. We failed to drop down below, which means one was in premium while another one was in discount, meaning this was at equilibrium while this one, Nasdaq, was in extreme discount, right? Again, we have the same crack in correlation based off of the first doubling of cracks in correlations over here. Okay, and from here onwards you can use your standard deviations or anything just to target highs, like target different prices. So I waited for this candle to close this candle to close above this, okay, in either one of the assets. And here we have one closure higher, one didn't close higher. See, one has closed above while the other has failed to do so. This is also another crack in correlation showing that there is strength in this asset right there. And I simply placed my entry right there. And my target was a very small target, I guess 6150 or something, right there, right before the second standard deviation. Okay, so let's see how this one played out, because we're not tapped in yet. Okay, I've placed my entry once this candle closed above this. We were tapped in right there, and you see immediately we see very less drawdown, meaning this is what we need to see after a change in the state of delivery or after a crack in correlation. SMT, we need expansion. We need we need price to reject everything and then I mean target its highs like this. Okay, so moving forward, what happened was just price started to spool higher, and now here market will not let anyone come back into the charts, like market will not let anyone have any trades whatsoever. It will just keep expanding, and there was I guess one single candle which took my take profit. It would be like one candle. Yeah, this one right there. Actually, this one was 12.55. It was this candle which actually took my uh, take profit. And I closed not here. I closed it around here somewhere because my daily consistency level was hit. So it was closed automatically before even the TP was hit. So reasoning came from these lows for me. If I say that I do not buy above the true open or days open, right? I had reason to buy, which was here. One asset did actually take it out. And you see here, we closed by this candle, but we didn't tap back in. This one would have made me miss my entry, while this one didn't make me miss my entry. My entry was tapped here. You see, everywhere there will be a crack in correlation everywhere. See, this candle, this is the candle which put me in the entry, while here, this was the candle which actually made the change in the state of delivery. So you have to keep your eyes open for easy targets, low hanging fruits. That's it. Easy targets, and use standard deviation for to mark out, like, project higher or lower or forward. So this was it for me, CPI day. I hope you found this video to be helpful for you guys. If you did, do like and subscribe to the channel. And of course, if you have any questions, you can ask me in the comment section. Till then, good luck, good trading, and see you next time.